Welcome to ForexTV.com's PM Exchange. It's Wednesday, March 18th. I'm Julie Sinha with your currency commentary. All eyes were on the FOMC today as the highly anticipated announcement was made that the U.S. Federal Reserve's Monetary Policy Board left the key interest rate unchanged. In response, the U.S. dollar got crushed by the euro, with Eurozone currency winning over 400 pips within minutes after the announcement. This was widely expected across the global markets, that is, the interest rate decision. And also the committee announced that it will purchase up to $300 billion in longer-term treasuries over the next 6 months. We are going to discuss how the market is reacting, including the euro jumping higher, with Melvin Harris of Advanced Currency Markets. Hi, Melvin.
Hi, how are you?
I'm doing well. How are you?
Very good.
Probably a very intense afternoon of trading.
To say the least.
So what happened, and what happened to all the techs that we're talking about? Let's just pay attention to.
All right, first thing to say, goodbye dollar. Today we saw the dollar get blown away. Not so much because the rates were kept unchanged. I think it was the commentary following the actual rate decision. You mentioned it. Some of the buying in mortgage-backed securities, treasuries, all types of fixed income assets is going to dilute the dollar. They're going to actually have to print money. It's a process called quantitative easing to purchase the actual assets. The supply of dollars is going to grow. The price completely dropped. A couple of good comments from some analysts on the street pointed this out early. We were ahead of the game on that too. We saw majors increase dramatically against the dollar across the board.
So you were saying the comments that were made by the FOMC accompanying it really pushed this euro action that we saw, because a lot of traders were saying that they were pricing in dovish comments. They were expecting, they were selling off the dollar in advance, and now we see this reaction. I
mean, we saw a dramatic change today. We saw a complete turning, not so much a recovery mode yet, but a complete change in the way Bernanke and the Fed has handled the situation. Another quick thing to note that may not have been mentioned elsewhere is that I do think this might open the room for the Fed to purchase some of the toxic assets. Everyone's wanting them to buy off the bank's balance sheets. I think they're expanding their balance sheet to be able to take in some of this bad paper. That will prove to be tremendous for risk appetite, and I think that's why the euro in particular jumped as much as 400 pips, while the others jumped about 100 to 200 pips.
So would you say that this was fairly unexpected today?
I think so. I think people, underestimated Bernanke's aggressiveness, man. I think he's very pleased right now. The market was very pleased, and this is going to be a strong correction. Not just a one-day trend. I mean, this is something fundamental within currency markets that happens in quantitative easing.
Okay, and then if we look at the Swiss franc, what happened with the SNB comments, that was also really unexpected by the marketplace. But we saw a shift in how the Swiss franc was moving. Can you speak about that currency?
I think you're right on the money. The dollar and the franc did the same exact thing. The SNB had very similar agenda to the Fed. They made some strong comments saying they were going to intervene if they saw the franc striking to levels that were above their expectations. They came in, they started buying other currencies. They pretty much accomplished their goals for the near term, but today may have thrown them off a little bit. The Fed came back and followed the comments from the G20 meeting over the weekend, and we saw coordinated quantitative easing. I keep saying it, but I have to keep re-emphasizing it.
Okay, sure. No problem. We had some commentary from the BOJ and then also the BOE. It seems like all the banks are being quite talkative. Maybe they're getting jealous of the FOMC taking the spotlight today.
I think you're right on the money. I think everyone's been kind of relying on the U.S. or expecting the U.S. to take a lead in this. I don't want to say they'll let us into the mess, but hopefully they'll lead us out. I think the fact that they have the largest economy in the world, I think some of the more aggressive moves and really being able to grasp the depth of how bad the situation really is puts expectations on the U.S. versus the BOE or the ECB. I'm a little disappointed in Trichet and some of the comments he put out earlier in disagreement with the rest of the ECB, saying that the quantitative easing method may not really be effective, or the rate at which they're lowering their borrowing rate is going to be effective. I think that's going to be counterproductive for the euro in the long term. So something to note as well.
Okay, and let's talk about some market correlation, and let's talk about gold, who moved in a very interesting direction today. It still ended lower, but it rallied after that announcement. What happened there?
Gold, man. I love gold. I keep telling everybody to watch that product, man. So it was weird, and it's something that I pointed out, with someone from the Wall Street Journal, that it's key to watch treasuries, watch the rate markets. I mean, 2 year rates dropped 24 basis points. Prices went through the roof. the Fed said they were going to buy bonds. We knew that rates were going to get squeezed to a point that gold was going to be the only alternative. And in fact, gold jumped from 890 to 942 at one point. I mean, that's a tremendous move in one day. But that was just logical, fundamental finance. And I think you mentioned it before. The technical side is fantastic, but if you look at the technical charts, they couldn't have even grasped the upside of that move. It was so tremendous. So something to note as well.
And then what do you expect to continue in the rest of the majors this week? Do you expect any more upset surprises? Or
I think this move, I mean, considering it's Wednesday, it's the middle of the week, this move may have a lasting effect throughout the end of the week. Traditionally, in any market, technically you see a little bit of a pullback after such a strong move, but we didn't see that when the S&P did that. We saw that move last about 2 or 3 days. So I think things will stay around current levels. We might see even more appreciation versus the dollar going into Friday, and maybe some easing up next week.
So a lot of fundamentalists are jumping up and down.
Oh, they're jumping up and down. The economists are happy. My job is relevant. I'm kidding.
It's going back to the point, because I'm sure they were feeling a little left out for the past several months. And then also, what about other markets? What about equities? What do you expect there?
Equities, right in line. I mean, I think guys who are looking for that bump, that support they wanted from the Fed to be able to go back in and dip their toe in more risk, they got it today. The Dow jumped up over about 118, 120 points. I think that was all fundamental. That was nothing else. We've been kind of treading on very shaky news. Banks coming out saying they were profitable the first 2 months of the year. That's good, but this is what we needed. We need to know that someone's going to come in and really go the aggressive route to try to stem the recession.
Okay, Melvin, thanks for sharing your perspective as always.
I appreciate it.
That was Melvin Harris of Advanced Currency Markets with his take on FX action. Next up, we have your equities and commodities wrap-up. Traders immediately cheered the Fed's moves, hoping they would lead to lower mortgage rates and a return to more bullish conditions. After being up triple digits, the Dow Jones Industrial Average gained 90 points at 7,486. The Nasdaq picked up 29 to 1,491, and the S&P 500 jumped 16 to 794. The Federal Reserve announced it would buy $300 billion in long-term treasuries over the next 6 months in order to try and keep credit flowing. And more freely again. Bond prices surged in reaction, causing yields on longer-term treasuries to fall sharply. The 2-year yield lost 24 points at 0.79%. The 10-year lost 48 basis points to 2.53%, and the 30-year shed 30 basis points to 3.52%. In trading energy, crude oil rose in electronic trading after the Fed announcement, erasing its 2.1% decline during the regular session. But at the close of the session today, crude shed $1.02 and change to $48.14. Unleaded gas lost 6 cents to $1.37 per gallon, and natural gas lost 12 cents to $3.76. Moving in metals, gold prices dropped for a third straight session today and finished at a 2-month low. But the precious metal surged in after-hours trading after the Fed revealed those plans to buy billions in longer-term treasuries. Gold ended $27.70 lower at $889.10. Silver also moved lower by 74 cents to $11.94, while copper lost a penny to $1.72. And that does it for your equities and commodities wrap-up. And this has been PM Exchange for Wednesday. I'm Julie Sinha. Join us again tomorrow for more news right here on ForexTV.com.